Here we are, June 22nd, 2023, right? The markets had a decent day today. Whatever. I'm not really here to talk about this day, although I will break the day down. I'm here to talk about the market as a whole. We are now within 10% of the previous market highs in 2021. I talked about this as early as June and July of last summer in 2022. Talked about it in October and November as well. If you go to my YouTube channel, you can see all of this. I just reposted literally a day of the market lows on the S&P 500, which I believe was October 28th. Maybe it was September 28th. It might have been September. I'm not sure. You can go look at the date and why that is so. So if you are interested in knowing why this market was destined to end up right where it is now, and I'm not telling you we're heading into a bull market. I'm telling you now we are finally in a zone where we're going to know what's coming. If you want to know how to predict what is coming next, you're going to want to watch this video. So let me go ahead and get into it. I'm going to pull up the chart now for the S&P 500. We're going to talk about, once again, why this could not have been the big bear market that they were talking about, or the beginning of the big bear market that media has been discussing, Bloomberg, CNBC, and why we were destined to be back at these levels. So let's get into it. I am going to pull that up right now, which is right here. Okay, so we have our screen up. We're looking at the S&P 500, as you can see here, and what we are going to evaluate, or what we're going to take a look at, is where we are right now, how we knew that we had to come back here. There was never any doubt in my mind, ever. That does not mean we can't enter a vicious bear market now. There's no way to prove that either. But we had to come back to these levels. We were always coming back to these levels, and I'm about to show you why. So as you can see, as I pointed out here, we are looking at the S&P 500. SPY is the ETF for the S&P 500. And if we were just to look at this chart as a standalone, I would say, let's look at the dates here. This is 2019 here at the bottom. If you have a look, that's 2019 right down here. It goes through today. Okay. If we want to highlight some of that, we can do that. Let me do that so that we know exactly what we're looking at. Here we are, 2019. Here we are today. Okay. What I would tell you if I were looking at this chart is, what does this chart tell me? It doesn't really tell me a whole heck of a lot, except for that in 2020 right here, there was a lot of buying done. How do I know it was buying? Well, simple. I can Monday morning quarterback it. There's a massive amount of volume, which is what you're seeing circled down here, followed by a massive run up in price. So I will tell you that I was well aware that was purchasing at the time. But if you're a critic and you say that I didn't know, that's fine. But I do know now, because there's a massive amount of volume. And then there is a massive run up. Now, let's go ahead and take a look at the highs, which were back in, I think I said 2021. I meant 2022, December of 2022. This was the highs right here. So let's just take a look at it. Here's the highs. Okay, now, if I tell you that I know that there was a massive amount of buying down here because there was this massive run up in price, if there was a massive amount of selling here, which would alleviate all this buying, what would I need to see below? What type of volume would we need to see? What we would need to see is massive volume. Do we see that? Does this volume look any different than this volume, or this volume, or this volume, or this volume? Does it even compare to 2020? How about the volume back here in 2019? Actually looks higher than at those highs. So what I can tell you right off the jump is that there wasn't selling at these highs. Why? I'm a soothsayer? No, there's no volume. Volume is buying and selling. There's going to need to be increased buying and selling if the large group of people is going to sell. Just like back in 2020, if there's going to be buying, there needed to be large groups of people buying and selling. And as you can see, there was large groups of people buying and selling. Now, let's examine this from the framework of Wall Street, big money, big banks, billions and trillions of dollars. Me, Derek Miller, retail investor. Who has the ability to create big volume, me or them? Even if there's 1 million knees, even if there's 10 million knees, who has the ability to create big volume? Me or big giant conglomerate banks that run the world? Big giant conglomerate banks that run the world is the answer. They also happen to know the answers, and they also happen to follow each other. So it's not a conspiracy. These guys follow each other. Do guys that follow each other and are far more in the know than a guy like me buy high or buy low? Well, I hope they buy low. Do they sell high or they sell low? Well, I hope they sell. That's how they make their money. The reason this market was always coming back to where we sit now is because no one sold at the highs. In fact, if you were being even-handed throughout this entire process, no one sold at the lows either. No one bought at the lows either. This market, as of right now, June 5th, 2023, has been nothing more than a standard correction with no major buying and no major selling. I've said it from the start, and I'm saying it again. All right? That's where we sit right now. If we want to take a look at the NASDAQ, which I would say is far more important, we want to go ahead and take a look at the NASDAQ, which I will do right now. It tells a little bit of a different story. However, it still very much says relatively the same thing. Here we are, back within 10%. I can pull up old videos and do the I told you so all day long. I am telling you, I watch volume, price, and gaps. Volume is the #1 indicator in any and all stock markets. It's the only indicator used by professional traders. Everything else is a joke. Okay? If you're a day trader using Fibonacci, I'm not telling you that that doesn't work from some high frequency volume trading standpoint. Maybe it does. I haven't met a lot of people that have had success with any indicator aside from volume and price. I love gaps to boot, and that's what I use. If we look again at 2020, let's just do it. Let's look at 2020 here. There's 2020's volume. Here's 2019, by the way. I think we should reference that since we're now going to look at the NASDAQ. Here's our volume in, what's this, January or so? Oh, that's April 21st. This is, no, it's not. The volume here. This is the initial fall. This is the fall to 340. This is the fall to 280, which ultimately went a little below 260. I put out a massive buy here and said that we would run back up to at least 360, which is where we sit today. I did that. This is not a complex thing I'm doing here. This is not complex, folks. I want you to know that. Here's your volume in 2019. Here's your volume in 2020. Your volume in 2020 is high. It doesn't look like anything like the S&P, does it? It doesn't. And I'll tell you why. Because this was real selling. This was real selling. The only problem is this was real. Oh, let me eliminate that. This was real selling after massive price drops. You know who sells at massive price drops? At massive price drops, there's a term for it. It's called capitulation. It's when retail gets scared out of the market. Big money, money that follows each other, money that creates massive volume, doesn't buy when markets, does not sell as markets fall. It buys as markets fall. This is more buying. If anyone made me gamble right now on whether we're headed into a new bull or a new bear, I would say we're headed into a new bull market. Now, the S&P has not confirmed that, the Dow has not confirmed that, and the Russell has not confirmed that. But I'll tell you what, the NASDAQ is sure pointing to a lot more buying taking place in January of 2022 and May of 2022. That's buying by big money. This market, I can't imagine it doesn't reach new highs. But we don't have to be soothsayers. What you will need to see is a massive increase in volume somewhere between where we sit now and the previous highs, which is up here. This is your previous highs. We will need to see a massive amount of volume take place in where we sit now and where the previous highs right here. You will need to see massive volume. And if you see massive volume, the market will head down. And it will head down at speeds that will rattle your soul. But if it doesn't, and things continue as they are, welcome to new highs. You know what? I think that's where I'm going to leave the video for today. I do actual breakdowns every Monday, Wednesday, Friday for my subscribers. We go through this stuff, and I also get into some individual stocks. If that interests you, head to vpgtheory.com. If you have questions, please reach out to me at Derek@vpgtheory.com. Derek@vpgtheory.com. And I will be happy to get back to you and see how I'm able to help. As for now, this is the end of today's video. If you did enjoy this, I have multiple social media channels, Instagram, VPG Theory Guru or VPG Theory. Look me up. Thanks for watching. I hope this helps. This is a system that is based on you spending 1 hour a month to avoid major downsides in markets. This is not about day trading. And I'll tell you what, we supersede most day traders' performance anyway, for a variety of reasons. I hope to hear from you.